Hello, and welcome to Ask the Mortgage Guides Live. I'm Sarah Patnode, and I'm here with Kevnick Mortgage Guides Kelly Overgard and Randy Erickson. Hello.
Hello,
Hello
hello.
there.
Hello. How are you guys tonight?
Awesome.
Fabulous. We're doing great.
Awesome. Well, we are excited to have you join us. And we're excited to have the viewers join us as well. We're just getting started. People are starting to log in. So we are so excited that you're here. Let us know that you're here. Give us some love and share with us in the comments that you're here and where you're tuning in from. Also, make sure to get your questions ready so that you can submit them at any time. We'll have a Q&A segment during this program. So we're excited to answer all those questions, right, Randy and Kelly?
We are.
Absolutely.
All right. So, our viewers may not know who you are yet. So let's take a moment and have each of you introduce yourself. So, who would like to start?
Sarah,
All
I'll
right.
take it.
Wonderful.
All right. So, hello, everyone. Good evening. Thank you so much for joining us. My name is Randy Erickson. I have the privilege to head up the Kevnick branch out here in Florida, and also have the honor of working with my good friend and partner, Kelly Overgard. So, Kelly, you want to tell us a little bit about yourself?
Yeah, absolutely. So I am normally located in Minnesota. We have two branches, one in Eden Prairie that we've had for a long time, and then we just opened our second location in downtown Prior Lake. So super excited to be downtown Prior Lake. Today, I actually am in Florida, not with Randy. I think I'm on the other coast, but I'm down here enjoying some weather, and it kind of plays into the topic that we're going to be talking about today. So Randy, why don't you tell us about the topic that we're going to cover today?
Yes, thank you, Kelly. So it's really interesting. So many homeowners today have found themselves in a situation where the equity in their home has gone up pretty significantly, and that's based off of a number of different market dynamics that that have taken place here over the last 2 years or so. One of the things, so when we talk about home equity, we talk about refinancing. One of the things that I hear all the time is that refinancing is dead. Is that basically it's a purchase market. Refinancing is dead. There's really no reason to do that. And we wanted to dispel that myth first of all, because there's a number of different reasons why someone or a client might be looking to refinance, and we're going to share some of those examples. And again, as we have questions, we'll answer those as well. So one of the things that was really interesting for me is in doing this job, you have such an incredible opportunity to work with amazing people, each with different goals, each with different aspirations, each with different dreams. Had the opportunity about a year ago to work with a client that was looking to do a cash out refinance specific to putting an addition on their home. Why? Because they're actually looking to move in an aging parent. They didn't want to move their aging parent into an assisted living facility, and by tapping into the equity in their home, they were able to complete an upgrade to their home and move their mom in and help take care of her, which was absolutely critical for them. Had another example here recently where clients wanted to upgrade their home. But in addition to upgrading their home, they had some unexpected medical bills. So by them being able to do a refinance and take some cash out of their home, they were not only able to catch up on their medical bills, but they had enough money left over to not only upgrade their home, but also even to have some more money left over in case there were additional medical bills that were coming in the future. So, again, for them, it relieved them of the burden of having a large amount of money sitting as a debt, with the hospital or what have you. Really gave them a lot of peace of mind. So it was another fantastic experience.
Well, and I think you hit it on the head, Randy. It is really one of the most amazing jobs in the world as a mortgage loan officer, to be able to sit down with a family, find out what their goals are, their dreams. And sometimes it's like you just explained, it's something that they're struggling with. How do I pay these unforeseen medical bills or this future care? And to be able to educate them and help them get that done, it's just an incredible feeling. So I like those examples.
Great.
I think another example, people have asked, well, what about the type of product that I have? And does it make sense to refinance? And I think you were going to talk about the FHA loans in particular.
Yeah, I was going to actually, go into into another example. So we get questions all the time as well about refinancing to get out of a loan. So just as an example, there are clients that we talk to, quite frequently that are in an FHA loan, not a conventional loan, so it's government backed, and one of the components of their loan is that they have permanent lifetime mortgage insurance, and so this was all based off of qualifying at the time, and a lot of individuals find themselves today in a much better position financially, both within the equity of their home, but also from their credit perspective, as they've worked on credit, et cetera. And by refinancing, it gives them that opportunity to move into a loan that may be considered or maybe more favorable to them, and actually remove that lifetime private mortgage insurance. So it's definitely a great thing for them to be able to do.
Mm-hmm. I think one of the things that just came to my mind that I want to share is kind of related to a topic later, but it has to do with the FHA loans. And, as we're working with clients and helping them refinance, like you said, into a conventional product, getting rid of that permanent mortgage insurance, the other thing that we can take a look at is we have some people that want to build their wealth through owning investment real estate properties. And FHA, interestingly enough, has this rule that says you can only have one FHA loan at a time. Well, sometimes that next property that they want to move into as their primary residence, sometimes it makes sense for that to be an FHA loan. So in that case, that's another reason why if you have an existing FHA loan, you want to keep that home. Not only would you get rid of the mortgage insurance like you had just explained, but it also gives you the opportunity to buy your next primary residence as an FHA loan. And one of the benefits a lot of people outside of mortgage don't realize is that you can actually purchase a duplex with an FHA loan with only 3.5% down. And it's one of the few products that allows that. So it's another reason why, with the rates as low as they are, if you have an FHA loan, depending on what your goals are, share them with us, and we'll see how we can help you with that. So I'm glad you used that FHA example.
Yeah.
And we have a couple more examples, but do we possibly want to go back to Sarah and see if we have some questions to kind of break up our talking of examples? Sarah, do we have any questions yet?
Yeah, thank you for just checking in with me here. Just feeling the love out here. We've got, of course, I'm live streaming from Minnesota. You guys are from Florida, so that's awesome. We do actually have one question that's come in already. And so would you like to maybe answer a question right now, and then we can kind of go into your other examples? And
I think that'd be great.
Okay, that sounds really good. So let's see here. I think that I just wanted to do a shout out here. We've got Leo. He's watching here. He says,
"Hey,
what's
Leo.
up, Kelly?"
Leo.
Hey, he's our faithful. We love it. Leo, thanks for listening in.
Yeah, he says, "What's up, Kelly? The best in the business."
Nice.
I love that. Yay, Leo. Thank you very much for tuning in tonight. That's awesome. So let's go ahead and answer a question here. So you guys can see we've got the comments coming in here. And I think maybe, should we answer the question from Kyle here first?
Sure.
The Kyle question here, we've got Kyle says, can I refinance my investment property? Ooh, good question. Can I refinance my investment property. Who'd like to take that one?
I'll take that one. That's a great question.
Okay, great.
Okay, so with an investment property, the short answer is yes. You can refinance whether or not it's your primary residence, your second home, or your investment property. The actual amount of cash out that you can pull and how much or how high you can go against the value, that's called the loan to value, will change depending on the product. But all three of those occupancies, primary residence, second home, and investment properties, yes, you can do a refinance to pull cash out. So that's a great question. And a lot of investors that own rental properties, that is definitely one of the ways that they continue to buy additional properties.
Mhm.
It's kind of funny, all of these reality shows, Randy, I'm guessing you'd agree too, they make things look so exciting, the flip or flop or whatever, all these different things. They make them really fun. But the thing is, it is fun, but you need mortgage experts, real estate experts to help you make those decisions. And I love that you guys are tuning in and asking the questions. So you can definitely do that.
Yep.
And should I give one of our other examples right now?
Yeah, Kelly, why don't you talk a little bit more about purchasing maybe a second home or an investment property?
Yeah, absolutely. And that is really good timing because I literally, as I said earlier, am sitting in sunny Florida and it is beautiful down here. So I happen to have a client. We've actually done quite a few, but I have a client right now that lives in Minnesota and is doing a cash out refinance of his home in Minnesota to pull that equity out and use as the down payment to purchase his Florida property. So by pulling that equity out of his Minnesota property, he's keeping his payment still reasonable. He actually got rid of his mortgage insurance. So this is actually an example of a couple different things. And then he also has the cash to use for a down payment on the Florida property. And he actually has enough cash to put 20% down on the Florida purchase. And he should be actually closing December 2nd. So before the holidays and before the actual snow flies. And Randy, I think you've done quite a few of those for our Florida snowbirds.
Yeah, and I'll just tell you just in brief that the experience has been amazing. And what I tell people, I was born and raised in Minnesota. I've actually spent more time now in Florida than I have in Minnesota. So as people transfer down, from the north, from the northeast, et cetera, I always tell people that you're gonna absolutely love it, and that the best part is to always go back on Facebook in January or so and show the weather that you're enjoying versus maybe someone up in Minnesota where it might be 30 below or what have you. So being able to go back and forth during the the best seasons or best times of year in two different locations is a tremendous opportunity, and it's a lot of fun helping people realize that dream.
Yeah, absolutely. And another reason to have these Ask the Mortgage Expert live is, in addition to helping our clients and giving examples that might help them, we also want to provide value to our real estate partners that are nice and listen in. So one of the examples I have for our real estate partners is getting us your prospective buyers as early in the process as possible. In this everybody talks about the hot sellers market, to make those offers stronger, to actually have the equity now to go what's called non-contingent. If they want to write an offer that's not contingent about, from the sale of their home, we can look at it one of two ways. One, you could do a refinance if it makes sense. But a lot of times, if it's a short-term fix that they need to pull the equity out so they can go non-contingent on their purchase agreement. A HELOC or home equity line of credit is usually the best option. And although we don't actually offer them here at Kevnick Mortgage, we have trusted partners where we will actually set them up to do that home equity line of credit because we want to help them make the best decisions. And the challenge for the realtors, working with clients that have all this equity, want to go non-contingent, is as soon as they list their current home, most banks and credit unions won't give them a HELOC. So that's why we need to get them in to get pre-approved earlier, actually talk about their goals, how we can help them set them up for success so that we can get that HELOC in place before they list the property. And that's super important to help them out.
Yeah, Kelly, to that point, having offers that can be submitted as non-contingent or without any contingencies, certainly going to float closer to the top as it relates to offers. We're seeing multiple offers coming through. I don't have to tell anyone that. You're hearing it, 10 offers, 15, 20 offers, all within a day, 2 days, 3 days, home selling for, 10% above asking, 15%. It's crazy, but, something as small as not having a contingency can have such a huge impact on a client's ability to get that second house or that next house that they're dreaming about.
Absolutely. Yeah. So I love the fact that we have these relationships, not only with our clients, with our business partners too. So we can help them make these decisions and get them in place. Yeah, absolutely. And then those were my examples. We can check back with Sarah to see if we have any other questions.
Oh, thank you, Kelly. Thank you, Randy. Really great information. And so I'm going to go ahead and put on a reminder here that we are here to answer questions. We want to be a resource to our viewers that are tuning in. And so let's go ahead and take a look at the comments and see if we've got another question that has come in. How does that sound?
That sounds great.
All right. Make sure to let us know that you're watching. Let us know that you're here. Say hello. Give us some love and submit it in the comments. So let's take a look here. We are actually live streaming to Facebook and to YouTube. So that's a real fun simultaneous live broadcast that we have going on right now. And we've got a question that's coming from YouTube. And the question is, do I have to refinance to get rid of mortgage insurance? Ooh, that's a good one. Do I have to refinance to get rid of mortgage insurance? Who'd like to take this one?
Yeah, Sarah, I'll take that one. That is an exceptional question. Actually, having discussions with a client right now about that very topic. So the answer is it depends. So it depends on the type of loan that you have. So we talked earlier about the FHA loan. So if you're looking to get rid of the private mortgage insurance because the value in your home has increased significantly, you'll need to refinance into a conventional product. If you're currently in a conventional product and you believe that you're in a position where you no longer need that private mortgage insurance, you can actually reach out to your servicer, your mortgage servicer, and ask what are the steps required to have that private mortgage insurance removed or at least reviewed. And most likely what will happen is they'll require an appraisal, a current appraisal, and that appraisal, compared to your outstanding loan balance will determine whether or not that private mortgage insurance can be removed. We're finding a lot of people that are paying private mortgage insurance currently that in all honesty, they should be reaching out to their servicers to at least, get a feel whether it makes sense to get an appraisal, because it's, again, it's, $75, $100, $150 a month that they're paying the bank that, honestly, I'd much rather see stay in their pocket.
Mm-hmm. That's a really good point. And I love what you said about contact your servicer, because that's one of the things I pride myself in, honestly, of being part of the Kevnick Mortgage team, is we answer your questions, even if it doesn't involve a product that we do. I had alluded to that earlier with the HELOC, but, we'll have clients that'll call us and say, how do I get rid of the mortgage insurance? And we'll make sure that they understand it's as simple as contacting your mortgage servicer, your current servicer, and asking the right questions like you explained. And I also really like one of the services we do. Once you're our client, you're truly a client for life. And one of the things that we do is an annual loan review. And that's an opportunity where we remind you that you have mortgage insurance on your conventional loan, and it might be, worth looking at the value and seeing if you can remove it. And I really like that because I've had conventional loans where I'm in this industry, and I know I've paid the PMI, the private mortgage insurance, for too many years, because once you close on the loan and you start making those payments, it's the farthest thing from your mind. So I really like the fact that we do the annual loan review, and we're all about the education first.
Yeah, and just Kelly, just to reiterate one point, our clients and our referral partners, these you all are long-term relationships for us. So it is not about us getting another refinance. It's directing you to the most appropriate solution based off of your needs or your current situation, et cetera. So being able to tell someone that, no, you don't have to refinance, you don't have to have the closing costs, et cetera. All you need to do is most likely get an appraisal, is very comforting to people, because it's much easier for them to come up with $500-600 for an appraisal and to have that mortgage insurance removed versus going through the whole process of refinancing, simply to have that mortgage insurance removed. So it's definitely, we always look at doing what is in your best interest, and make sure that we provide the guidance in that way.
Yeah. I actually couldn't have figured out a better way to wrap up our educational piece here, Randy, than what you just said. I love that. So thank you.
No, thank you.
And Sarah, do we have any other questions?
Yes, thank you for welcoming me back into the program here. I have to say, wonderful information. I learned some new things tonight myself. I absolutely love the annual loan review. What a great service for your clients, because life does get busy, and it's do I have that PMI on there, and that's just a great service, and I think that goes into the cornerstone of the evaluate, educate, execute. I mean, those are just like brand principles for Kevnick Mortgage, right? And that Kevnick experience, providing that seamless experience. So fantastic. So what we're going to say is get your questions in, and you can even submit your questions after the live as well. We go in and answer every single question. So at this point, we don't have any more questions at this time, but what I'd like to talk about, and we'll check back to see if any more questions have come in, but I'd like to have people mark their calendars, right? Coming up for the next Ask the Mortgage Guides Live, we are going to have both of you, Randy and Kelly, back in the house here. We are going to be talking about veteran loan benefits. So I'm going to let you guys share a little bit about the next topic, and then I'll come back on and wrap us up. So tell us a little bit about what you'll cover for the next Ask the Mortgage Guide Live, November 10th at 5 p.m. Mark your calendar. So I'll let you share about that.
Okay, perfect. Randy, do you want to start, or should I?
Please go ahead.
Okay, awesome. Perfect. So I have been in the mortgage industry for 35 years, and I have never served in the military. So it's very sincere when I say this, even though it might sound, like a sales pitch. It just is not. Being able to help our veterans with their home loan needs and really help them figure out what's in their best interest. There's so many home loan benefits that they don't know about that we educate them. We believe in the education. So it's my way to serve, because I'm so grateful that the military, honestly, is protecting me and my family. So some of the things that we'll talk about is, the certificate of eligibility. They get it. What do you do with it? How often can you use it? We have disabled veterans that are disabled at different percentages to full disability, and we can talk about the different benefits for them. Widows of our veterans, how can we take care of them? So there's a lot of different topics that we'll cover, in addition to answering the questions that come in. And I know Randy would love to help our veterans too. And that topic is going to be 2 weeks from tonight, and it's going to be Ask the Mortgage, the same kind of format where you can go on the Facebook Live, and we're actually still creating the actual topics based on pulling together the examples that we have done for our veterans and seeing what kind of questions. So you can even ask questions ahead of time. Do you have anything to add to that, Randy?
No, it's just, truly is an honor. My dad served. I know a number of people on here served. I unfortunately did not have the opportunity to serve because of a medical challenge. My oldest son currently is serving in Japan in the Navy. So it is truly, truly an honor to do anything and everything that we can do to help help our veterans and those that have given so much to us, help them get into their home of their dreams or their next home or what have you. It's just really, really, truly an opportunity, and we want to make sure that we're dispelling any of the myths or the misnomers that are out there regarding VA qualification, et cetera. So we're going to be really sticking to what the VA benefits are and ultimately how we can help them. So really, really excited for that one. Really excited.
Yay. And Sarah, what is that exact date of our next Ask the Mortgage Guy?
Yes, so November 10th, Wednesday, November 10th, 5 p.m. Central Standard Time. And we will have a post pinned again to the top of our Facebook page. We're going to talk about it. We'll share stories about it. Mark it down. Join us. Get your questions ready. An absolutely wonderful benefit for veterans. My dad is a Vietnam veteran. I thank all veterans for your service. We want to have this special program designed just for you. So get all your questions ready and you can join us back there. So wonderful. Thank you for sharing that. So we do have another question that's come in that we've got from the YouTube. And the question is, this is really good. How do I get started? How do I get started? So who would like to share how to get started with their loan needs?
Yeah, I can take that, Kelly, and just chime in where I missed up. Just reach out, and as Kelly mentioned earlier, the sooner the better. Whether there's planning involved or just simply education and execution, just reach out. You can reach us via the contact information that's on the Kevnick Mortgage website. We're available via cell phone, text, email, etc. So just reach out. We're happy to help at any point in time.
Absolutely. I agree. So we have an amazing website, kevnickmortgage.com. That's a great place to start. Would love to give you the consultation, the advice that you need, ask you the questions, your goals. And then also we have the Facebook, so you could contact us through there too. We'd love to hear from you. We'd love to help you out.
Absolutely. And here I'll go ahead and we've got the email here. So I'll go ahead and put our slide up here as we're starting to wrap up tonight's program, and with a thank you, a sincere thank you. And you can email Kevnick at kevnickmortgage.com as well. But I want to thank you, Randy. I want to thank you, Kelly. I want to thank the viewers tonight and thank you for your thoughtful questions. This is what it's all about. The education piece, right? Bringing the education to our clients. And it's been a wonderful evening. Before we wrap up, do you guys have any parting last thoughts for the viewers before we wrap up for the evening?
No, other than thank you guys so much for tuning in and sharing the information that hopefully you have walked away with. We really appreciate it. And we'll see you again in 2 weeks.
Sincere thank you as well. Thank you, and we'll see you November 10th.
All right.
That's awesome. We look forward to positively changing your home loan experience. So get in touch, follow us, and we'll see you next time. Thanks so much, everybody. Have a great evening.
Good night, everyone. Thank you.
Thank
Good
you.
night.